In many ways, stocks have surpassed every record in history, gone beyond any indicator, taken flight like a spaceship way off into the distance. With global stimulus packages creating an absolute mess, money ends up somewhere. Today we see as more and more money is flowing into tech stocks. In particular, this has created mega valuations for a handful of companies, pushing this beyond reality. But has it popped? You came here for the truth, so let me unveil that for you. Today we're going to look at what has been happening in the stock market. I'm going to show you one article in particular that gets into the depth, the situations as to why this is the case. This is coming from David Einhorn. I'm going to break that down in detail. I normally don't break down one particular article in too much detail. I like to touch on a couple points here and there, but on occasion I want to change it up a little bit and give you a little bit more depth, because this is going to give you insight right here in one video versus little bits and pieces here and there. I want to talk about some other things after that as well, so stay tuned. A lot of information jam-packed in here. Let's go. Greenlight Capital's David Einhorn just called the top in stocks and gave 10 reasons tech is in a bubble. I want to say right off the bat that I don't necessarily know what's going to happen in the future. I cannot determine that. I'm simply reading the articles, I'm giving you the information, and you do what you want with it. September 2nd was the top in the stock market. The hedge fund investor David Einhorn argued in Greenlight Capital's third quarter letter. Einhorn said that the market was in a bubble driven by technology stocks, and the bubble has already popped. Einhorn said that what matters in a bubble is market psychology, not valuation. Valuation is irrelevant. That's what makes it a bubble. There are so many indicators to look at, and I'm just going to show you what he has listed here. But remember all of the other things that we have been looking at. It's not just what you see in this one video, but there are so many different things. Before I show you that list, I just wanted to note something. Einhorn acknowledged that his 2016 bubble call was wrong and that this one could be disproved, but he contended that investor sentiment was moving from greed to complacency, something that happens just before it moves to worry and then panic. If you look at any of these statistics, you see it going all the way like this, and then suddenly it is through the roof. It is just absurd on so many different levels. I have shown you the statistics, how it just goes into hockey stick formation all of a sudden, and we're supposed to ignore it? No, absolutely not. We should look at it in depth, and this is just a few examples. Number one, an IPO mania. 2020 has seen a surge in IPOs despite the situation we've got going on in 2020, and blank check special purpose acquisition companies, SPAC, have been the preferred route for companies to go public. Then you look at number two, extraordinary valuations and new metrics for valuation. Einhorn pointed to this recent favorite, price sales growth divided by sales growth. This ratio is the PEG ratio on steroids and amounts to nonsense. I really love the fact that we can agree on certain things, because just like with all of the different metrics they use, my goodness, they don't even have to use generally accepted accounting principles. They are not going in the same ways that you are as an individual. If you set up a company, if you try and do things the way that these big corporations do, they'll smack you down. But they are able to do it. They're able to lobby the government. They're able to control the whole system because it's a revolving door. And meanwhile, you got the talking heads on TV telling you this and that. Oh, be distracted by this. Look over here. It's a shiny object. And meanwhile, they're taking everything from us. Let's look at number three, a huge market concentration in a single sector and a few stocks. Something I've talked about many times before, of course. The top 5 stocks in the S&P 500 make up 20% of the entire index, while technology sector represents more than 28% of the index. It's extreme, We know that this is the case. We saw the same thing happening, of course, back in 2000. Nobody wants to really highlight the fact that, hey, when you've got concentration like this, it ultimately brings problems. People just say, well, technology is the future, and so on, but we're not really understanding all of the nuances. Look at the data coming from the EPFR, and you will, my goodness, you will see how this is broken down. You know that. I've shown it to you here. If you're a viewer of this channel, a regular viewer of this channel, you know where the money is going exactly and how it is all laid out, and it's not a strong signal. Number 4, a second tier of stocks that most people haven't heard of at S&P 500 type market capitalizations. Einhorn was referring to a slew of cloud and software stocks that have seen a meteoric rise during this period in 2020 and now sport valuations of more than $20 billion. You have to understand, when we see craziness, it ends up ending badly. That's how history has shown us. I know that everybody wants to believe that there's an infinite amount of money out there, and as long as nobody sells, well, then everything's going to be fine. But there are temporary instances where the market can come down significantly, and that's, I think, what he's trying to highlight. The more fanciful and distant the narrative, it seems, the better the stock performs. This is crazy to think about, but I mean, here we are. Einhorn could be referring to story stocks that have a business plan but little to no revenue and yet still see a surge in valuation. One example is Nikola. You know how this company right here, they are supposedly going to create the next best electric car, and as far as I'm aware, they haven't even created one, which went public via a SPAC earlier this year and saw its market value surge ahead of Ford's, even though it said it didn't expect to sell cars and recognize revenue until late 2021. And we know how all of these dates get pushed back. They say 2021, but then we get there and, well, okay, not 2021, maybe it's 2022, and then it's only just a trickle in 2022, and they go on and on and on. They just keep pushing it further back. As long as all of these different analysts keep pushing the price higher in what they expect, their forecast, there will be people that buy it based on that. A lot of the big banks will start going in, buying here and there, and it's just crazy to see how ridiculous it really is. Number 6, outperformance of companies suspected of fraud based on the consensus belief that there is no enforcement risk, without which crime pays. So talking more about that, look at 7, outsized reaction to economically irrelevant stock splits. We saw this earlier, and they reference here Apple and Tesla, and the stocks went crazy. They have no value. When you stock split, it doesn't create any more value. Look, it is a pie, okay? I could divide this pie into 4 big pieces. I'm sure those would be 4 delicious pieces, but if you take that same pie and you divide it not 4 times, and you just keep splitting it up and up and up, everybody is eating the same amount. I could still take that quarter of it and eat it, but it doesn't give you any additional pie. It's so ridiculous, but that's the way that investors have seen it now, and it's crazy. They say, oh, well, now the retail investors can come in. The retail investor represents such a small percentage. In a way, what's happening here is because of all the Robinhood traders and things, you have the retail investor going in, and then that data is sold to companies like Citadel, and then from there, those companies are buying it, the algorithms are trading it, and so on. But the retail investor themselves represents a very small percentage. All right, don't fall asleep on me. I got a couple more. I'm going to run through these really quickly, and then we'll move on to the next piece of information, okay? Increased participation of retail investors who appear focused on the best performing names. You've seen it. It's all concentrated. That is never a good thing. Number 9, incredible trading volumes in speculative instruments like weekly call options and worthless common stock. What about this? Hertz. You remember the whole deal with Hertz, a bankrupt company, and they were just buying into it like it was candy. I mean, it's crazy, but that's what we saw, and that is very real because we know there will be more of that happening. It's no doubt, even on the way down in any bull market, as this, the peak is gone, people are thinking, oh, now's the time to buy, now's the time to buy, and they keep doing this, trying to buy the dip, and they get screwed over in the end, ultimately. And last one, number 10, a parabolic ascent toward a top. Stocks have surged to all-time highs during this period of time in 2020, driven by the technology sector in particular. This has been the case. It's been documented here. These are the 10 things. I thought it was really good because it's all highlighted right in one video, whereas, I might mention 2 or 3 in a video, and then you get another 2 or 3 in another one. This is all in one. Really good information. You take what you want from it. It's all up to you to decide. I do agree the fact that the valuations are really stretched today, though with the Federal Reserve devaluing the currency, anything is possible. Where's all the money going, you're asking? Well, certainly we have seen tech stocks getting much of it, but there has been some others that have benefited from all of the easy money. But when you look into it deeper, you realize, in fact, yes, even more money is going to tech stocks. What am I talking about? Check this out. Record flows pour into ESG funds as their wokeness is debated. This is an issue I've talked about before. I'll just cover this really quickly. Exchange traded funds built on environmental, social, and governance themes have attracted record inflows this year as the US grapples with this issue of 2020, devastating weather, and so on. But for anyone looking to invest with conscience, it might pay to check under the hood. Inflows to the ESG ETFs have surged to $22 billion so far in 2020. Now that's fantastic, except when you look at the names that are in these supposed ESG funds, what do you have? Apple, Amazon, Microsoft, and you go down the list. All of the tech stocks, the FANG stocks are there, and it is so unfortunate to see how people, they get swindled all because they're not paying attention. It might be something to do with the ESGs. It might have something to do with anything, any of the ETFs they're buying, any of the investors that they are relying on. I shouldn't really use the word investors, but speculators that they are watching to then make their decisions. Truly unfortunate. Be careful. Bonuses before bankruptcy. Companies doled out millions to executives before filing for Chapter 11. Why do you think this would happen? Is it a coincidence? Is it really a coincidence that these companies here would take care of their own people on the inside before filing for Chapter 11? You know that's what happens, obviously. And the people in the government don't care. Why? Because they'll probably be in that position in a year from now. They don't realize it. The average person, the general public, doesn't realize how this works. There's details in here. They give you the names like Hertz and JCPenney and so on. You know, because I've covered it here and I'm sure you've seen it in the news. This is the way it works. This is when you know you've got a bubble on hand. JP Morgan, Goldman Sachs, Mickey Mantle, sports trading cards prices soar as restless hobbyists evolve into day traders in a $5 billion market that may offer better returns than Wall Street. Look at this. They actually get into some of the details. Some of the things here are suggesting that it has performed better than the S&P 500 since 2008, but this is the one that got me. Fractional ownership has emerged, allowing people to own shares of a card they may never hold or even see. Collectible, a fractional ownership website recently launched by selling $25 shares of a $2.5 million Mickey Mantle card. I mean, okay, we got to talk about this for a second here. I get it. I get it that what people are doing here, it's just so ridiculous that somebody's going to buy in $25 into this card thinking that they are an owner, a fractional owner, and they're nothing but. This is the way that it happens every time. A bubble expands and they form everywhere, 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 and then they pop, and then something else is inflated afterward. Maybe that's gold. Maybe that's going to be land. Maybe it's real estate. Maybe it'll form somewhere else. We don't know right now. We can only see that in the rearview mirror, which certainly doesn't help you in the present, but this is what occurs, and you just see everything rising like a meteor. It's just going up crazy. This meteoric rise is something that is hard to tell when you're in the inside of it, but is certainly present today. Last thing, really quickly, one of those things that has been going up like crazy is home prices. Case-Shiller 20 City Composite Home Price Index year over year. It has gone back up to 2018 levels. Remember, this is the year over year, not the total index. It has gone crazy right now. Certainly throughout 2020, we have watched certain areas, certain cities that have been going haywire. Other places haven't fared so well. Well, I'm going to end the video there. If you found it informative, hit that thumbs up button. When you do, you are supporting me. So I appreciate that. Simply by clicking on that one button, you can help out this channel. So thank you very much. If you want to learn how to sell stuff online, I'm talking about e-commerce, you can get the whole deal for free at my website, theamazongps.com. If you want to learn how to get everything you need with the financial system, I'm talking A to Z, you can get that in these two books. There's a link in the description, or if you prefer the audiobook version, themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? A lot of detail, a lot of data. You got to check it out. Click it. I'll see you there.